And now we have Peter Barnes with that news on the banks. Let's listen.
Well, that's right, David. All 33 big banks and U.S. subsidiaries of big foreign banks met the minimum capital levels or exceeded them expected under this year's Fed stress tests. But one big regional bank, Huntington Bancshares of Columbus, Ohio, landed right above the Fed's regulatory cutoff, and a few firms were close behind it. The cutoff is 4.5% for the strongest form of bank capital, common equity Tier 1 capital, basically cash on hand, which today is a healthy 12%. The stress test is the Fed's annual check of banks with assets of more than $50 billion and how they would be able to handle a hypothetical bad economic downturn with 10% unemployment, a 50% drop in stock prices, and a 30% drop in housing prices. All of this part of 2010 Dodd-Frank financial reforms to make sure Washington doesn't have to make any more taxpayer bailouts of banks. This kind of downturn, like the Great Recession, could, of course, cause bank losses, hurting bank capital and lending. Huntington would come in at 5% Tier 1 capital under this scenario. BMO of Canada would end up at 5.9, Ally Financial at 6.1. Among the biggest banks, Goldman Sachs would fall to 10.2%, Morgan Stanley 10%, Citigroup at 9.2, JP Morgan Chase 8.3, Bank of America 8.1, and Wells Fargo 7.2. Now, part two of this process, as you recall, comes next Wednesday when the Fed will announce the results of its review of banks' proposed capital plans to return capital to shareholders through dividends and stock buybacks, something that Wall Street and investors pay very close attention to and are waiting on. David?
All right.